Disclaimer.
Guys, drop whatever nonsense you're wasting time on because the silver market just detonated like a hidden minefield, and if you're not locked in, your wealth is about to evaporate in the blast. We're staring down a massive China-driven premium gap that's sucking physical metal east faster than a black hole, with spot silver clawing to $90 an ounce while their retail quotes scream past $119. That's a $20 chasm, begging for arbitrage sharks to feast. Gold's no slouch either, hovering at $3,850 spot, but trading in Shanghai, with whispers of hidden bids pushing it toward $4,000 equivalents. This isn't some sleepy correction. It's a full throttle alert triggered by Beijing's insatiable appetite, draining Western vaults and forcing banks to bleed on failed shorts. Remember last year's $30 silver lows? We mocked the doubters, and now those stacks are tripling while fiat fools watch their dollars dissolve. Let's be real. This China premium isn't random. It's the tip of a conspiracy where Eastern powers are quietly cornering metals to crush dollar dominance, backed by data showing their imports exploding 50% year over year. You think premiums will shrink? Hell no. They're widening as dealers ration stock, leaving latecomers begging for scraps at double the price. FOMO's gnawing at your gut yet? It damn well should, because while Wall Street peddles paper illusions, real silver's vanishing into Asian strongholds, and gold's riding the same rocket. Imagine your portfolio gutted tomorrow as prices vault to untouchable heights. That's the nightmare for anyone hesitating. I've been screaming this from the rooftops, exposing how global elites manipulate markets. But now the numbers prove it. China's hoarding is the death knell for cheap metals. Your future hangs by a thread. Stack now or starve later. Stick around, because I'm ripping the lid off why this alert changes the game forever. Okay, let's hammer home the cold, hard evidence before this spirals into outright pandemonium. As of today, January 18th, 2026, COMEX silver futures are battling around 89.51, but the spot's locked at 90.04 after Friday's close, shattered expectations. Flip to Shanghai Gold Exchange, and it's a bloodbath for Western holders. Their benchmark translates to 190 USD without VAT, rocketing to $119.59 retail with the 13% tax slapped on. That's not fluff. It's a $10.29 premium gulf that's got traders arbitraging like mad, buying low here and flipping high there, siphoning supply eastward at warp speed. Gold's mirroring the madness. COMEX spot at $3,845, 20. But Shanghai's pushing $3,912 equivalent, with subtle bids hinting at even steeper climbs as central banks stockpile. Dealer chaos is off the charts. APMEX and SD Bullion are hiking premiums to $4, $6 over spot for American Eagles, while generics command 3+, and inventory alerts flash red for 90% of products. Vault stats? COMEX eligible silver's cratered below 95 million ounces, down 40 million from 2024 peaks, with recent deliveries yanking another 4.8 million. LBMA London's available float? Whispered at under 50 million, the thinnest since 2021's mini crunch. Even sovereign mints are cracking. US mints uncirculated 1O's Eagles, jacked to $169 each, proofs at $173 with not available tags everywhere. That's up from $90 whispers last week. China's Panda Bullion, equivalent to $117 troy ounce, spiked from $129 Friday. Pure bullion, no proofs. This alerts the ultimate disruptor because China's emergence as price discovery hub exposes decades of Western suppression. WikiLeaks docs, JP Morgan convictions, all pointing to rigged futures that kept silver chained low. Now, with their economy devouring industrial silver for solar and EVs amid a debt spiral forcing QE everywhere, the stakes are existential. Miss this, and you're trapped in depreciating dollars as metals become the new reserve. Geopolitical shifts amp it. BRICS hoarding. Japan carry trade unwinds. Turning this into a wealth transfer from fiat holders to stackers. Physical's the only shield, paper's a trap. With inventories evaporating and premiums detonating, the game's rigged against the unprepared. This sets the stage for total domination. Now let's drill into the Eastern Vortex, pulling it all under. Wake up and smell the smoke, because the real price discovery engine isn't COMEX anymore. It's Shanghai, and it's running circles around the West like a supercar on a dirt track. Right now, mainland China retail buyers are forking over $119.59 per ounce, including VAT for legitimate physical silver, while Shanghai benchmark without tax sits at $100, now it's 90 USD equivalent. That's a straight up $10, $20 monster premium over our $90 spot. And it's not shrinking, it's expanding as Beijing's industrial machine and retail frenzy collide. This isn't cute Eastern demand, it's a strategic vacuum cleaner. Chinese refiners and wholesalers are snapping up every available lot in London and New York before it even hits auction, then flipping it domestically at these nosebleed levels. Arbitrage desks are in overdrive. Buy Western futures or bars at $90 to $92 landed cost. ship east, clear customs, sell at 110 plus net, pure profit machine that's been running nonstop for months. Every ounce that disappears to Asia tightens the global physical pool, forcing Western dealers to chase replacement metal at higher and higher bids. Look at the flow numbers. China's net silver imports exploded over 50% year over year in recent quarters, with solar panel fabricators alone projected to consume north of 350 million ounces in 2026, dwarfing total global mine supply growth. Add EV batteries, 5G infrastructure, and jewelry demand spiking as middle-class wealth shifts out of property bubbles, and you've got a structural deficit that's laughing at paper shorts. The premium isn't going away until the West matches Eastern pricing or supply magically triples. Neither is happening soon. This black hole effect is already ripping through dealer shelves. US and European sites show low stock or back order on everything from 100 Oz bars to 1 Oz rounds. What's available jumps $5 to $8 over spot overnight. Comex delivery pressure mounts as longs stand for metal they intend to export or hoard, not roll over. Last week's 4.8 million ounce notice wave, just the appetizer. When Eastern buyers keep pulling, Western availability evaporates, premiums here balloon to catch up, and spot price gets yanked higher to close the RB gap. Guys, this is the stealth wealth transfer of our lifetime. While Wall Street analysts still mutter about overbought and rebalancing flows, the smart Eastern money is voting with trucks of metal. China's not waiting for permission. They're cornering the physical market piece by piece, turning silver from suppressed commodity to strategic reserve asset. The longer you sit on cash or paper, the more that premium chasm widens and drags spot toward parity with Shanghai reality. If you're not building your fortress now, you're handing your purchasing power to the dragons across the Pacific. The black hole is active, it's hungry, and it's only getting deeper. Physical stackers who act before the gap closes are the ones who will look back and say they saw the shift when others were still asleep. Here comes the carnage nobody saw coming. Or rather, the carnage the big desks pretended couldn't happen until their accounts turned bright red. Top-tier analysts at TD Securities just got absolutely demolished for the second time trying to short silver. They entered the trade at $78 an ounce, betting on index rebalancing to dump billions worth of metal and crash the price. 1 week later, silver ripped 19% higher, forcing them to cover with a stinging $606,000 loss on that single position. Paper money, sure, but that's real pain for a firm that thought they could keep playing the old suppression game. This isn't isolated. These are the same sharp minds who got burned earlier in the cycle, yet they doubled down anyway. Why? Because the playbook still whispers, silver always comes back down. Except it doesn't anymore. The rebalancing event, that supposed $5 billion outflow everyone feared, got swallowed whole by relentless physical bids. No crash, no capitulation. Just higher highs while shorts scrambled for exits. CME even hiked margins mid-rally to cool things off, and silver shrugged it off like water on a duck's back. That's not normal. That's a regime change. Screaming in your face. The message is brutal. Paper shorts are no longer safe. When Eastern physical demand overrides Western index mechanics, the old correlations break. Volatility explodes because every failed short adds rocket fuel. Covering rallies feed momentum chasers, who pile in, who trigger more covers, creating self-reinforcing loops. We're seeing it live. Open interest on near-month contracts swells as new longs enter, refusing to roll, demanding delivery instead. That pressure builds like a pressure cooker with no release valve. Now flip to the retail and industrial side. They're not waiting for analyst notes. U.S. Mint struggles to keep up, with uncirculated Eagles jumping to $169 and proofs at $173, while not available banners dominate the site. China's Panda Bullion equivalent hits $177, up from $129 in days, pure investment-grade coins vanishing into private hands. These aren't numismatic premiums. They're distress signals from mints that can't source enough raw metal fast enough to meet exploding orders. This bleeding of shorts is the catalyst that flips sentiment from maybe a top to this is just getting started. When respected contrarians get repeatedly proven wrong on the downside, confidence in higher prices hardens. Momentum traders who sat out start loading up, fearing missing the train. Physical buyers accelerate stacking, pulling even more supply off the market. The feedback loop turns viciously bullish, failed shorts, higher volatility, more physical hoarding, tighter inventories, even bigger short pain. Guys, this is where fortunes get made and destroyed. The banks that once dictated price are now the ones getting dictated to. If you're still holding fiat, waiting for a pullback, understand you're betting against a freight train that's already left the station. Physical in hand right now isn't speculation, it's positioning ahead of the avalanche. The shorts are bleeding, the momentum is shifting, and the next leg up could be the one that leaves doubters in the dust forever. This is the breaking point where institutions themselves start screaming for help, when the very entities that produce the metal can't keep pace with the tidal wave crashing against their doors. The US Mint just turned into a live-action stress test, and it's failing spectacularly. Uncirculated 2024 1 Oz American Silver Eagles, listed at $169 per coin on their official site. Proof versions, $123. That's not a gentle premium bump. That's a 70-80% markup jump from levels people were seeing just days ago. Order attempts get canceled mid-process, customers rerouted to higher prices or flat out told not available. Inventory tabs glow red across the board. Bullion eagles, proofs, even collector sets vanishing faster than they can restock. Flip to the east, and the People's Bank of China is mirroring the meltdown with their own silver panda bullion coins. Straight investment-grade 30-gram pieces, not special editions, now equivalent to $170 USD per troy ounce, a rocket from $129 literally overnight. These aren't numismatic toys, they're official sovereign bullion, minted by the central bank itself, and they're getting hoovered up by domestic buyers who see them as the ultimate hedge against yuan volatility and property crash fears. When your own government mint has to triple prices to ration supply, that's not market froth. That's a flashing red beacon that physical demand has outstripped production capacity by miles. Why does this matter so much? Because mints are the canaries in the coal mine for real-world shortages. They don't set speculative prices. They react to raw metal feedstock costs, plus insane order backlogs. When the US Mint can't source enough planchets fast enough and China's PBOC jacks panda pricing to slow the stampede, it confirms the upstream pipeline is clogged. Refiners in Switzerland and Mexico report allocation cuts of 30 to 50% to new buyers. Forward contracts push into late 2026. Mines can't ramp overnight. Silver output grows maybe 1 to 2% annually at best, while consumption from green tech alone surges double digits. This sovereign-level stress feeds directly into retail frenzy. Dealers worldwide see the mint signals and front-run the pain. Premiums on Eagles and Maples balloon to $5 weight over spot. Generics 4+, kilobars in Europe, quoting $6 weight premiums. Customers flood sites, carts empty in minutes, restocks last hours. The psychological switch flips hard. If the government mints are rationing and repricing this aggressively, I need to secure mine now before it's gone forever. Guys, this isn't hype. It's institutional capitulation. When central banks and national mints start behaving like desperate private dealers, the game has changed from nice hedge to strategic imperative. Physical holders who locked in at lower levels aren't just up. They're sitting on assets that governments themselves are racing to control or replicate. The mint meltdown is the loudest alarm yet that cheap silver is extinct. Late buyers will pay sovereign-level prices or get nothing. The signals are blaring, the cracks are widening, and the scramble is only accelerating. If your stack isn't growing while the mints are melting down, you're missing the most obvious wealth preservation move unfolding in real time. The institutions are waving the white flag. Time to load up before they close the gates completely. Everything you thought you knew about silver pricing just got obliterated in broad daylight, and the old rules are lying in pieces at our feet. For half a century, literally generations, silver was trapped in a psychological prison between $4 and $50, a range engineered through relentless paper manipulation. Futures flooding and concentrated shorts that kept the metal artificially cheap while industrial demand quietly built underneath. WikiLeaks cables, JP Morgan settlements, decades of analyst whispers, all pointing to the same ugly truth. The price wasn't discovered, it was managed. That cage is gone, blown apart. Silver didn't just break out, it declared independence. We're no longer in a traditional bull market climbing a familiar ladder. We're in a brutal overdue price reset where suppressed value floods back in violent waves. The metal is finally catching up to its fundamental reality. Tiny above-ground stocks relative to consumption, irreplaceable in solar, batteries, electronics, and medical tech, and now treated as monetary insurance by nations and citizens alike. This reset isn't gentle, it's tectonic. Veteran voices who once cautioned downside are now forced to confront the shift. One top-tier analyst with decades of scars just laid it bare. Silver has exited that archival $4.50 box that persisted for 50 years. Most other metals blew through their old highs long ago. Copper, lead, even gold in 2011 went far beyond. Silver lagged because of the chokehold. Now, with long-term momentum indicators, screaming new regime, and relative valuations realigning, the forecast isn't modest gains. It's explosive. Expect silver in the couple hundreds in the coming handful of months, and quite possibly $300 to $500 before the dust settles. Do the math on that. If the gold to silver ratio compresses back toward historical norms, forget the current 81 distortion, think 31-21, even lower in panic phases, and gold replicates even half its prior multifold moves toward 6,000, 8,000 plus. Silver at 3.6% of gold's price lands you squarely in triple-digit territory with room to run wild. This isn't hopium. It's arithmetic meeting. Suppressed history finally uncorked. The awakening hits hardest psychologically. Classic TA fails here. No clean pullbacks, no textbook corrections, because we're unwinding 40 plus years of distortion, not riding a normal cycle. Every dip gets bought ferociously by people who know the score. Central banks stacking gold proxies, Eastern retail paying 120 pluses equivalents, mints rationing at record premiums. The reset feeds on itself. Higher prices validate the breakout, draw in sidelined capital, squeeze remaining shorts, tighten physical even further, and propel spot toward levels once called impossible. Guys, this is Liberation Day for silver. The price isn't going up because of hype, it's going up because reality finally overpowered the fiction. Physical holders who've endured the valley aren't just rewarded, they're vindicated on a biblical scale. Those ounces you stacked when everyone laughed, they're now the keys to a new financial order. The reset isn't over, it's accelerating. $300, $500 isn't a ceiling. It's a waypoint on the road to wherever fundamentals and fear take us next. If you're still measuring silver by yesterday's yardstick, you're already behind. The old reality is dead. The new one is here, it's ferocious, and it's only getting started. Secure your position before the reset reprices you out entirely. This is the moment the scoreboard flips forever, and the people who chose real metal over endless promises stand tall while the rest scramble in the wreckage. Forget polite gains or measured rallies. We're witnessing the coronation of physical stackers as the last one standing when every other asset class gets exposed as vapor. You, the guy who bought at $30, $50, $70 through the mockery and boredom, you're not just ahead, you're untouchable. Your ounces aren't tied to margin calls, broker freezes, or systemic liquidity events. They're yours, cold, hard, deliverable, and rising in value while fiat evaporates and paper contracts turn to ash. Feel the weight of that truth. Every time you ignored the experts calling tops, every midnight order you placed when doubt crept in, every box delivered to your door instead of sitting in some allocated vault halfway around the world, it all converges here. The mints rationing at 170 plus, China's pandas at 177, shorts bleeding 600K in a week, Eastern premiums pulling spot higher. All of it validates the quiet decision you made to own the real thing. You're not gambling on momentum, you're holding sovereignty in your hands. The emotional payoff hits like a freight train. Security that no bank can seize, no government can dilute, no crash can erase. Families sleep easier knowing wealth isn't hostage to algorithms or central planner whims. Retirements aren't gambled on 401k volatility. Kids inherit something tangible, not IOUs printed yesterday. This isn't bragging, it's relief mixed with righteous vindication. The valley of despair we walked together for decades, it's over. The suppression machine broke, and the ones who refuse to sell out are reaping the harvest. Paper chasers? They're the cautionary tale now. ETFs dumping during halts, futures locked in backwardation, brokers raising haircuts while longs beg for delivery that never comes. That's the fate of trusting promises over possession. Physical owners don't beg, they wait, watch prices climb, and smile, knowing the metal is safe, the value is real, and the game is finally fair. Guys, if your stack is heavy tonight, raise a glass to yourself. You saw through the fog when most couldn't. If it's still building, this is your war cry. The reset is live, the triumph is real, and every ounce you secure cements your place among the winners. The emotional high isn't fleeting greed. It's the quiet certainty that comes from owning the one asset history always returns to when trust collapses. You didn't just survive the shift, you positioned to dominate it. Hold that feeling close, because the ride from here only gets more exhilarating, and the view from the top is worth every second of the climb. Guys, we just tore through the mother of all silver wake-up calls. China's black hole premiums devouring supply, big bank shorts getting shredded alive, mints worldwide melting down at record prices, the decades-long suppression cage finally shattering into a brutal price reset, and physical stackers emerging as the undisputed kings of this new reality. Spot blasting toward $90 with Eastern bids pulling it to $120 equivalents, gold tagging along at $3,850 plus dollars with its own stealth surge. This isn't a blip, it's the inflection point where cheap metals die and real wealth transfers to those who hold the actual bars and coins. The FOMO is nuclear right now. Every hour you delay, premiums spike, dealers ration harder, and the window to buy at anything resembling reasonable slams shut. The smart ones aren't waiting for permission or pullbacks. They're loading trucks while the herd debates. Don't be the one telling stories later about how you almost got in before silver hit triple digits and beyond. Smash that like, if this lit a fire under you, drop a comment with your stack update or biggest aha moment from today. Let's build each other up in the comments. Hit subscribe, turn on notifications so you catch every alert the second it drops, and share this video with anyone still sleeping on what's unfolding. Your future self will thank you. This is not financial advice. Precious metals carry risk. Values can drop as well as rise. Always do your own due diligence and only allocate what you can comfortably hold through volatility. See you in triple digits.
Disclaimer.